It's been quite a while since I've done a Magic Formula portfolio update, and this is a big one because I'm going to be doing a rebalancing since I haven't touched these stocks in actually well over a year. Well, about 14 months since I've done a trade. So let's see how the portfolio is done, and then I'll get to actually rebalancing this thing and talk about next steps. If we head on into the Magic Formula slice, here are all of my holdings, and let's go ahead and sort by gain to see who the biggest winners have been since I've at least opened these positions. And as I would have probably suspected a while back, it definitely seems to be very top heavy. We have a double here by Catalyst Pharmaceuticals, some pretty big winners otherwise, H&R Block, Sega Technologies being others, but otherwise lots of negative holdings. But yeah, that's pretty much it for performance. You have a few bigger winners and then a lot of losers. I don't know if that is typical. We have been in a bear market over the last year. So we've had a lot of negative stocks during that time, although I believe it hasn't done too poorly compared to the broader market. This negative 23% or so is a money-weighted return, and that's about a loss of $700 on around $3,600 invested in the account over time. And I do have about $2,800 in cash sitting here, which I will deploy when we do a rebalance. As a reminder, here's what the current portfolio looks like. Very heavy on the pharma stocks. Once you get past pharma stocks, it is pretty diverse after that, but I mean, a third of the fund is pharmaceutical stocks. And remember, this is based on the top 30 stocks in the market over $50 million in market cap with the highest earning yields and highest return on invested capital, with those two ranking factors combined together to determine what the quote unquote best, cheapest stocks are in the market. At least according to Joel Greenblatt's Magic Formula, as made famous by The Little Book That Beats the Market and the sequel, The Little Book That Still Beats the Market. In the book, he advocates for holding on to the stocks for a year before you return to the screener, the Magic Formula Portfolio Screener, which is online for free at magicformulainvesting.com. Here it is right here. And you run the screen to see what the new top holdings are, and anything that's still on the list you would keep in the portfolio, but otherwise you would add some or all of the new holdings depending on how you're running with the portfolio. I'm going to be doing all 30 holdings, so anything that I already have will stay and anything that isn't on this list will be added. But otherwise, that's pretty much it. I started out this portfolio pretty actively in that I was churning the holdings every single month to see if that might yield some better results. It did not, and I didn't run it for very long because frankly, it was kind of exhausting, and I wanted this to be a more passive sort of quantitative investing strategy where I'm not putting a ton of thought into it, just to kind of see what happens over time. So we're sticking with that. I stuck with that for actually a little bit over a year. I meant to do a rebalancing episode before this, but oh well, we got an extra couple months of performance to look at. And now I'm going to go through with setting up the trades for tomorrow because I am filming this on a weekend. The markets are closed, and once the trades go through tomorrow morning, sometime after that, I will go ahead and show you the new portfolio. So I'll be back in just a second. And we're back a little under 24 hours later. The trades went in this morning, so everything is now rebalanced, and we have all of the new holdings that are coming out of the Magic Formula list. And I've gotten rid of any holdings that are no longer on the list. If we go to the one-day view, we can see we're off to a roaring start, about a 1%, almost 2% gain on the day, with most of the portfolio being green, but we'll see what happens over the next year before we do another rebalancing. And to confirm, I did deploy all of the cash I had sitting there minus these $3. So that has all been invested. So the portfolio has basically doubled in size if you didn't count the cash before. So there's now more invested funds, and they've been allocated as equally as possible. We have some holdings here that are 5% holdings. The rest are targeted at 4%. So when I did the rebalancing, that is how that worked. And here's a summary of all the changes that were made. The ones highlighted in green were added, the ones in red were removed from the list, and the ones in white either I already had in the portfolio or they're not available on M1 but are currently on the list, so I wasn't able to add them. I'm not going to go through every move here, but just to highlight the ones that were in the portfolio before and are still in the portfolio, that would be Buckle Inc., Co-Diagnostic Inc., Fulgent Genetics, Hydric and Struggles, Immersion Corp, Inovia, Misabi Trust, Perdocchio or Portocio Education Corp, not really sure how to say that. And then Sega Technologies was the last one that was already in the portfolio, which I added a little bit of money to when we did the rebalance. Otherwise, all of the other holdings in the portfolio are new, so the majority of them are. And if you have an M1 Finance account, you can actually copy this portfolio. I'm not recommending you do that by any means. It's up for you to decide what to do with your own money. But if you want to use the Magic Formula strategy for some reason, that could be be a nice way to start. Granted, you are missing a few holdings that aren't available on M1 Finance and are probably available over the counter. Maybe they're available at other brokerages, but I'm not that worried about leaving these out since we still have well over 20. But here's a quick overview of all 30 stocks that are on the list right now. We actually had an uptick in the number of pharmaceutical stocks, so they must have had a pretty good earnings year or something last year that would potentially cause this to happen, or maybe they're really just down on price. But something is causing that to happen, obviously, but that is a pretty substantial uptick from an already huge proportion. Actually, if you just compare it right here to the former portfolio, we went from 33%, a third of the portfolio, up to about 43%. So a sizable uptick. Commodities are also making a larger portion of the portfolio, which is pretty interesting, especially given what commodity prices have done. We've seen a lot of oil stocks, for example, that have done exceptionally well in the last year or two. So maybe it's sort of part of that trend of commodity stocks being pretty cheap relative to earnings, at least their previous earnings. We'll see how it holds up. I'm starting to think this should just be called the pharmaceutical formula strategy because you get a lot of pharma stocks. Coming back to this tracker page, once the day is actually officially over, it's still November 7th right now as I'm filming this, that will show the November 7th closing price, and then we'll see how that does over the long term when I return and give an update on this. Not sure when the next update will be. I had mentioned long ago that I want to do something potentially with the acquirers multiple alongside this. And now that I've done this rebalancing, maybe that would be a good time. But regardless, we'll be tracking how this does. Now that we have a full year of data under our belts, why not go get another year's worth to see how it does? And yes, I know there are many reasons why you might not want to, but we're going to do it. So I'm still going to reserve judgment on the Magic Formula portfolio for now. We only have about a year and a half worth of data with really one full year of actually a stable portfolio where I just bought and hold for about 14 months. So we'll see what happens for this next year now that I've rebalanced things, have new holdings in the portfolio and some carryover holdings. So it'll be really interesting to see what happens once I have a couple years worth of data, especially going through this down market where we've had some pretty significant volatility, especially towards the downside. We'll see if this portfolio can be spared from any of that if that happens. I guess it'll largely depend on how pharmaceutical stocks perform over the next year. But over half of the portfolio isn't in pharmaceuticals, so there's still a lot that could happen outside of that industry. And it does seem like all you really need is a few big winners to outweigh the potentially many losers, and we'll see what happens. Like I said, we're off to a good start, a nice green day to get things going. That's pretty much it. If you don't want to miss future updates, be sure to subscribe. Otherwise, until next time, take care.